The markets tanked, Bitcoin dipped under $100,000, US government shut down, man, sentiments at rock effing bottom. Brace yourself for Goblin Town. Cancel all hope. Hope is not allowed anymore, at least for the foreseeable future. Maybe not. Because if you zoom out to the bigger picture, it looks a lot like what's happening right now is we're actually refueling for new highs. And when everyone is braced for absolute disaster and they're out capitulating, the max pain trade is for prices to go up, leaving shorts in the dust. And of course, as usual, all the shorts pile in at the bottom. Today I'm going to show you exactly why that may be where we're headed from here. So first of all, we have to pivot away for a second from crypto and take in what the heck is happening right now in the stock market, which is super important because these markets are usually very interlinked. I know there's been a bit of a divergence recently, but it's not usually the case. That's an exceptional event, especially now that we have crypto ETFs. We're getting more altcoin ETFs. Just got 3 altcoin ETFs recently for Litecoin, Solana, and HBAR. We have digital asset treasury companies buying all kinds of shit coins. And generally what's good for growth stocks tends to be good for crypto, where we're talking about risk-on environments and loose financial conditions. You've probably seen there's a lot of speculation right now that tech stocks are being mainly driven by AI momentum. But at the same time, AI is in this massive bubble that's comparable or maybe even worse than the late 90s dot-com bubble, and that we are on the precipice of absolute Armageddon. Repent now for all of your terrible sins. To be fair, the view is understandable. Things have got a little bit frothy in the stock market recently. Nvidia is up more than 1,300% over the last couple of years. And it's at about a $5 trillion market cap, which is higher than the GDP of several major nations. And as this post points out, the S&P 500 should probably be renamed the S&P 493 since the Magnificent Seven stocks, companies like Nvidia, have long since broken away from the index and are now carrying the entire index by themselves. So it's just like the dot-com bubble, isn't it, baby? Except that's actually not such an accurate comparison. Because if you look at the data more closely, and you know we love data around here, data! There are major differences between what's happening now and what happened back in the 1990s. Most importantly, earnings growth is increasing. Tech mega caps, they have real revenue. We don't see a big divergence between earnings and valuations like we did back in the 1990s. Earnings and valuations are largely keeping up. AI compute use as measured by token use went up 3,800% over 1 year. Well, there is a huge demand for chips, a huge demand for new energy, or in other words, there is substance behind this market rally. It's not just hype, it's not just speculation. We genuinely are in the early innings of the AI revolution, baby. If you take a look at the charts, price action doesn't even look like the dot-com period. You can see on the NASDAQ chart, viewed on a log scale, that back in the 90s, there was a massive spike that smashed out way above the top of the regular channel, clearly into bubble territory. And then, of course, it had to correct back down in a disgusting crash in the early 2000s. But right now, there has been some excess in the markets. We're not going to say there's been no excess. Okay? People had a few pre-drinks, getting a little saucy out there, but it's not closing time yet. The bartender's not calling for last drinks. The era of the great money print, the stimmy checks, being locked at home, all that kind of stuff back in 2021 was a time of great excess. But even that did not match the dot-com levels, not even close. We're now cleanly back within the regular rising channel, okay? So when it comes down to it, this is just, it doesn't look like the dot-com price action from 30 years ago. And JP Morgan agrees. JP Morgan said that the prices would have to go up another 50% in the major indexes to match the dot-com levels. This looks more like sustained acceleration. And here's another interesting comparison. Before we get into that, guys, if you are trading Bitcoin, Ethereum, Solana, anything in the cryptocurrency market, serious traders know how important execution and liquidity are. That's why I've been using Femex for years. It's secure, it's fast, it gives you access to all the hot coins on the market, and it's available to everyone, everywhere. That's you. You might need VPN in some cases. And right now they're running an absolutely insane promotion. And using this link right down here to sign up gets you exclusively into this deal. Deposit $5,000, get $500. Deposit $10,000, get $1,000. Deposit $20,000. They're going to put $1,600 cash back money into your account. That's crazy. Plus, you can get up to $20,000 in trading bonuses. These kind of deals don't come along often. They don't last long. Okay, so if you want to take advantage of it, go get it, link down below. And just ask yourself the question, will you finally start taking your trading seriously, move over to an exchange that's going to reward you massively? Now's the time, links down below. That other interesting comparison. This is from Jurian Timmer over at Fidelity, who's taken price action from CSCO, the big ticker of the dot-com bubble, and compared it to Nvidia now. as that's the closest equivalent in the current AI boom. Now, Cisco here is in pink, NVIDIA is in blue. Now you can see that NVIDIA now is nowhere near the overinflated insanity that Cisco hit back in the 90s. Now, could NVIDIA get up to that level at some point? Sure, but the message is that it isn't there now, and that's the important thing. Everybody keeps calling this the .com, the .ai bubble. We're not there yet, ma'am. In fact, the whole market is not yet at those levels of mania. And again, remember that NVIDIA's revenue is real. Earnings are backing up valuations. It's happening now, and it has the earnings there. It's real shit, guys. So those are some points showing how it's easy to make the .com comparison, but the parallels don't always stand up to scrutiny. The data does not support the .com bubble thesis right now. We need to go dramatically higher to start having that conversation. Still though, stocks went down earlier this week. Crypto hit a bit of a rough patch, if you will. So if you want markets moving again, you might be asking whether there are enough upcoming catalysts and tailwinds to support continued risk-on environments. And in that case, the answer is yes, again, from the data that I am seeing. So first up, a major drag at the moment has been the US government shutdown. Perhaps by the time you're watching this video, it might even be open. When that happens, it's gonna be great because the government shutdown is clogging everything up. Markets hate uncertainty. They hate not knowing when it's gonna end, and they are starved for liquidity. The Fed right now is operating in the dark. It's the longest shutdown ever. That said though, the pressure is mounting. The odds are rising that a resolution could come soon, which is why I say by the time you watch this, we may have even had a resolution. When that happens, something big happens, okay? An enormous amount of pressure gets released, okay? Just imagine a big old steam valve being like that. That's the liquidity flowing into the market. Because right now, the Treasury General account has been nonstop filling up because banks have not been able to tap that source of money. That liquidity, $1 trillion of liquidity, will start draining back into the market. Then we've got a new chair for the Fed coming in 2026 in May. This will be a super dovish appointment mandated to cut interest rates, keep liquidity flowing. Trump wants rates at 1%, and he's going to get it with his next Fed chair, okay? This implies a much greater tolerance for inflation and a shift towards easing and running the economy super effing hot. We already know that even now, with Jerome Powell still in charge, QT, quantitative tightening, or that is the Fed running off their balance sheet, creating continued pressure to the market, is going to end on December 1st. And by the way, in case you guys are not signed up yet, we have a free newsletter. It's awesome. We do macro, we do crypto, we do stocks, trade updates, charts, and much more. It's free. Check it out. Link down below. But anyway, shameless self-promotion aside, going back to the tech, we're looking at a period of major government spending on AI and tech infrastructure, with governments taking large stakes in Intel, several AI-adjacent mineral firms, the $500 billion public-private Stargate project. You guys forget about that? You forgot about the Stargate project, didn't you? It's okay. It's been a lot going on this year. Anyway, also plans to end reliance on China when it comes to rare earths, all this kind of stuff. Plus, we're talking about Donald effing Trump, the best president, the guy with the plan. Some people say it's Trump's economy. Some people say it's Trump's market. This guy. Anyway, the Trump admin. You get a sense there's a willingness to print in the event of a crisis, flooding the system with liquidity if needed. And of course, Trump even himself kind of said he wants to make American. He wants to make America the crypto capital of the world. He is prioritizing growth and employment over inflation control. He thinks that we can outgrow any other problems, but you got to run it hot. You've got the ingredients for a major bull run that could last well throughout 2026 and maybe even longer than that, maybe longer than anybody thinks. When it comes to stocks, AI and power grids are the hot sectors, but in conditions like that, running the economy hot, pushing for growth, well, there's an AI revolution in the process. Crypto will be a beneficiary too, even if it hasn't been in recent times, okay? Keeping in mind that this is the most pro-Bitcoin, DeFi running, meme coin launching administration in the world. Literally, the president of the United States is now the #1 crypto influencer. He's taking my job, man. Look, Trump's already taken my job. That's it. Thanks for watching. I'll see you in the next one.